It is 9 o'clock. We will go ahead and call the meeting to order and acknowledge all board members are present. So nice to see you all. And we will start with a motion to accept the minutes from our October 28th meeting.
So moved.
Second.
Any further discussion? All in favor? Aye. Opposed? Carried. Let's go next to Joe Barry for our secretary report.
Yes, good morning, everyone. I'm pleased to report that the governor signed JSCB Phase 3 earlier this week, and it's very exciting news. In addition, in your packet today, you have two annual items. Our proposed insurance purchase for directors and officers liability. The premium is up slightly. We had discussions with the insurance agent, and due to COVID and other factors in the market, it rose, but we feel it's still an acceptable fee to pay.
Okay.
Then, as you've seen, the annual audit material is available, and we're going to have a presentation on that today. And finally, I'm working on the 2022 JSCB schedule. I'll send it out by email to everyone to consider for the next meeting. 2022 is kind of sneaking up on me, so
Yeah.
I meant to do it earlier, but we'll get it out for everyone.
You and the rest of us, Joe.
Thank you, and that completes my report.
Great. Thank you, Joe. And yeah, again, really good news on JSCB 3. I know for I see some weary eyes in the chambers here. We still have work to do on phase 2, but to know that we've got phase 3 in the pipeline is great. It's really good for our families and our kids and administrators to know that we're going to continue to give them the facilities they need. So I want to thank our state delegation, Governor, for giving us that support. It's really exciting. So with that, we will go next to our report from our program manager. Morning, Chris.
Morning, everyone. So yeah, and we'll echo what you said. That's great news that you guys got that through. So a lot more to do then, but that's
Right.
a good thing. Now you got the means to do it. So
Right.
So talking this morning a little bit, just underneath the upper left-hand corner there, project budget and approvals, we do have seeking a increase to the not to exceed amount at Corcoran. That's to again, we're continuing that moving some dollars around here to maximize that, and so we want to make an amendment to the not to exceed. It doesn't change the building budget, it's just the not to exceed amount that we're authorized, so it'll be a shift within the budget for that building. Continuing our efforts to get change orders into the state education department. We're really making a push here on both the T1, what's left of T1, and the T2 schools to try and get those through. So you can see that we've identified second and third quarter of 2022 for the select T2 schools, Corcoran, Fowler, Nottingham, Danforth, to get those done. So part of that is reconciling the projects from a financial perspective, issuing all the changes that we have, getting those changes formulated, and then submitted to state ed so that it puts us in a position to get our final cost reports in. So that's a push on that effort at the moment. Ed Smith, happy that we're in a position for final payment on Ed Smith. We resolved our issues over there. Did want to point out that there is in our constraints and critical issues box, as you recall, we did some rework of the fire alarm over there due to some issues that we had with that. That work has been completed, certified, tested, closed out, and it's now in the legal counsel's hands to seek recovery on that for the repair. So that'll continue. But with respect to the general contractor that was there, they've met their obligations, and we're comfortable with issuing a final payment over there for him. So that's a good thing.
Ed Smith is done.
Yeah. With the exception of the reconciling with the designer of record.
Physically within the school. No more.
Correct.
No more work going on.
Correct.
Okay, great.
Correct. Blodgett and Huntington have been another two that we've been pushing on for quite a while. I'm happy to report that we've got, financially we've reconciled on that. Now it's just a matter of just issuing the change orders, getting those put in place, and I anticipate that we'll have final payment for that. I don't know if we'll make it for the December meeting, might be the January meeting, but we're pushing to see if we can't get that in a position to get final payment rendered for both of those in December.
So, same question there, physically work done or change orders requiring some additional?
Physically, work is done.
Okay.
It was more the financial closeout of agreeing on things that we had been historically disagreeing on.
Got it.
So, but yes, that portion of it, the closeout paperwork is in, the documentation side of the house is in order. It was just a matter of the financial reconciliation. So pleased to report on those, so to get those moving forward. Beyond that, just in terms of a construction update, the Fowler interior renovation work that we were doing is largely there. Anticipate reoccupancy of areas over there and turnover areas over there between now and through December. It'll probably be a staged turnover, but things are in place. The pool renovation work there is substantially complete with the lights, the painting, the bleachers, the filtration system, starting blocks, and lighting. So that was a pretty comprehensive rework of that. The Fowler Concession storage building, again, work over there is very largely complete. We have to get through a fire department inspection on that. Once we have that, then the building will be turned over. Well, it is basically turned over, but needed to dot the I on that one. Corcoran, again, largely the base work is completed. We're working through punch list corrective work over there. Fair amount of punch list work to get through, but pushing on that to get that to get through that here in the next couple months. Henniger work continues in our main office, in the library, and the lower cafeteria. Anticipate the new main office occupancy here somewhere in January. And then the lower level cafeteria, again, that is something that does appear on our constraints and critical issues box there. We're having actually a focus meeting today with the contractor to talk about schedule for that lower level cafeteria, because it is behind, and we want to understand what the recovery plan for that is and how we get there. So that is one that's on our radar at the moment.
How far behind are we? 'Cause I mean,
I'm going to tell you it's probably a month behind where it should be, Jaime. So, and we have had some changes. I'm not going to put it all on that. I think, and some of it has just been need a little more focus on efforts over there in terms of the work that's happening. So, but we have a meeting this afternoon with them, I think at 3 o'clock, to sit down and talk out loud a little bit about that, because it is an operational issue. Obviously, the sequence there was to complete that lower level to allow the other work in the upper level to advance. So.
gonna be able to recover and do anything during the Christmas break and all that when we have when the kids are out?
We obviously, we plan for that now. That's currently in the plan. I think more so is just an amplification of the forces that are there, maybe working some longer hours even during the week, because the area is turned over to them. It's not like it's an availability issue. You know what I mean? The space is theirs, they're working in it. We just need to, I think, a little bit more amplification of efforts. So, at Nottingham, largely, again, we're largely there. We're working through punch list items. The last piece is part of that phase 2 work that we had done, which was the locker room reconstruction. And we're looking at the lockers have been a bit of a challenge over there in terms of getting the locker delivery. So, but I think we have our arms around that, excuse me, and anticipate that locker room reconstruction would be done here in December, to get it to a point where that could be turned back over. Clary, again, work is, all we're down to there is punch list, and a majority of the punch list has been completed there. So anticipate that will be done here very shortly in terms of punch list completed. Elms, we are, as I mentioned before, and that's been carried for a couple months in our constraints box, is we had the foundation there largely. Once we got in, we were going to do a little bit of underpinning, which turned into a lot of underpinning, which turned into some interior work underneath some columns. Again, that is, we're largely there now with that. However, it did impact the ability to have some of the subsequent activities allowed to advance when they were supposed to, because we were doing that underpinning work, which was pretty intrusive. So long and the short of that is, we've talked about this before, but the plan is to reoccupy in February. So that's off the mark a little bit. But I think that all said, you needed to do it. There wasn't an alternative there. We weren't gonna go put new work in place, knowing that we may be susceptible to additional settlement after the fact, so. But we are working with the general contractor there. The request was made formally from them for some extended general conditions to go longer. So we're having conversations with them to come up with what's equitable for that. So, but the formal ask was made, so I did want to inform you of that. So, and Danforth, the big thing there was that obviously the heat, we got over that hurdle. Now it's working through punch list corrective work that's remaining over there, and we're advancing that well. So,
What's the time limit on that one? The time limit?
in terms of Danforth being done, that's one of the ones that we're targeting for the second quarter of '22 for final payment over at Danforth. But all the spaces are turned over for use there, and the systems are functional. It's just a matter of working our way through punch list. And again, the financial closeout component of that, agreeing on things that we may have disagreed on in terms of cost. I think I covered a majority. I think we weaved in a majority of our constraints and critical issues. Again, I just the only one I would touch base on again is just the fact that the change management component, we're really trying to dial into that. You know, some of these disagreements, if you will, in terms of entitlement for additional compensation, obviously accumulate over the course of a job, even though we may have formally rejected them. They still, the contractor still has the right to protest that and appeal that. So we're working through some of those issues to try and dial that out.
One of the concerns that I'm getting right now is that the construction that is taking place during the day when the kids are in the building is triggering the fire alarm. So we have had to evacuate the buildings quite a few times last week, and also it's happening this week. Winter is coming, and we need to be more careful with the work that is being done in the building, because, I mean, kids will not have coats or all that to go outside, so we are very, very concerned about that.
Yeah, no, I'm aware that I was aware of it. I mean, I know that we need to tighten up on the procedural side to make sure that we don't have another trip. So we'll keep a focus on it.
Any HVAC related concerns going into the winter? Any heating issues?
We had a couple. Yeah, I mean, Danforth was our primary one to get the boilers
Yep.
up and running, but the second one was at Nottingham. We had a lot of mysteries at Nottingham in terms of areas not being heated, areas being overheated. We did have some focused discussions over there with the temperature control contractor and with the district, because there was a combination of some inherent issues that they've had combined with some issues that developed as a result of some of the renovations. But I think largely, I'm going to look to Tom, but I think largely we have our arms around that at Nottingham at least.
How about Henniger? Are we okay at Henniger?
To my knowledge, yeah.
I remember early in the year there was issues with the air conditioning.
Yeah, we've had some issues in the addition. We had some plumbing issues. We've resolved those. Knock on wood, it's been quiet the last couple of weeks. The
Okay.
fire alarms have been an issue, and I've been working with the construction manager to address those.
Okay. Did we get those ink packs on the fire alarms?
We put them in some non-JSCB buildings too. We're in the process, but I think we have 4 buildings done and 3 more are in progress right now.
Okay.
Fire alarms required in bathrooms?
Depends.
You mean a pull station or?
The smoke detectors and all that.
So
By law, they're required?
if we have, a lot of the schools want the doors open in the bathrooms for student management, so if we have the doors open then we have to put them on the fire alarm hold open system, then if the building goes in alarm, the door closes. So, they are requiring them when we have that. If we don't have that, depending on the building, we may not have to put them in. But generally, if the instructional staff is asked for those door hold opens. So we're in one of those situations.
Yeah, please.
Okay, this is off track here a little bit. First, I want to say thank you to everybody that's been working so diligently on getting this done. And I want to thank our state representatives for bringing back the extra 300 million. But I'm going to go back to what I've said before, because I hear you talking about ELMS and all the constraints you had. When are we going to start advocating for new build? Because we keep getting these rehab jobs, and this is just a statement,
Yep.
that we keep dumping thousands and thousands of dollars in. We could have built a couple of schools by now, and then we wouldn't run into, I mean, this is just me, but at this point, when do we start new build?
Yeah, it's a topic that's brought up a lot, right? But what I can tell you is that fundamentally, the way the system is currently configured, right, the state makes it a bit more advantageous for you to renovate as opposed to build new. And it comes back to how they reimburse or aid the project. Fundamentally, they I don't know if it was done with intent, but that's the reality, is that you're better served to renovate a building from an aid perspective than you are to build new. When you build new, they take a very focused look at what your enrollment is, the justification for building the new space. They won't aid you on certain components of that new space. They only aid for instructional space. And I'm not saying it can't be done, but it certainly does make it more challenging to build new than it does
So
from an aid
100-year-old
perspective.
building, we'll prefer to keep dumping money into a 100-year-old building to go on and build a state-of-the-art school that'll precede you and I. So, okay, just sounds like, makes a little sense.
Agreed with your perspective, certainly. It's counterintuitive, right? I understand that. But it's kind of an inherent inefficiency, if you will, in terms of how
I
it's
get
kind
it,
of
and
set
I
up.
just really want my state officials
Sure.
to hear this, because they really need to start looking a little bit more on doing new build, and then we can go 20 years down the road and don't have to build,
Right.
keep repairing buildings.
Sure.
but,
No,
okay.
fair
Not
statement,
architect,
fair
but-
statement.
Okay. That's it.
Thank you. Point well taken. Any other questions for Chris?
Okay, thank you.
Thanks. Keep up the good work. All right, so next up, Bill mentioned we have our financial statements. So Keely, I don't know if you're going to present, but if you are, come on up.
Good morning. Thank you, Mayor. I left 2 packets at your spot, one for the draft of the audited financial statements, and then one a 2-page required communication that we'll talk about after the statements. Going through the financial statements, on page 1 and 2 is our independent auditor's report. This outlines management's responsibility for the fair presentation of those financial statements, as well as the development and design of appropriate internal controls. Our responsibility as Bonadeo and your auditors is to express opinions on those financial statements based on our audit. We perform a risk assessment and design audit procedures to respond to that, to ensure that we have adequate evidence to support those opinions. You'll see on page 2, we are expressing unmodified opinions on your financial statements. That is the highest level of assurance that we can provide as your external auditors. This means that we feel, in our opinion, that these financial statements are fairly stated in all material respects. In conjunction with that, we did not propose any audit adjustments, so meaning the figures and the balances that were provided by management at the school district are a reflection of what is in this financial statement. That's important for you folks to know, because that means those figures and those interim balances that you're receiving throughout the year are a true reflection of what ends up in the figures that are provided to us at year end. Just as a side note, there's a suite of audit standards that are applicable at 12/31/2021 this year. So next year's audit report will look different. We'll spend a little more time walking through that, but I just wanted to talk about that change coming through. I think it's actually advantageous and will be more helpful for the reader. There'll be a whole shift in the audit report with the opinion being in the opening paragraph, which ultimately is what you folks are looking for. So again, we'll spend time on that next year when you see that new framework. On page 3 through 9 is the management's discussion and analysis. So this is the portion of the financial statements that recaps the full financial statement, hopefully in a more digestible way, provides a little bit of comparative data, and allows for management to highlight any future factors that they would like the reader to be aware of. This section of the financial statement is required but is unaudited. On page 10 and 11 is your government-wide financial statements. Page 10 is your statement of net position, or typically what people think of as the balance sheet. It has your assets, your liabilities, and your net position, which is the term for equity. You will see on the statement of net position, there is a new item right under assets. It's a deferred outflow for about $264,000. This is a direct result of the refunding that you folks did with a serial bond this year. So you folks issued a new serial bond in 2021 to refund 2 bonds from 2010 and 2011. So this deferred outflow represents the difference in the reacquisition price and the net book value of the old debt. So that amount will continue to be amortized and reduce your ultimate interest expense over the life of that old debt. You had an increase in net position of about $13.6 million this year. As a reminder, your government-wide financial statements are recorded on the full accrual basis, meaning all assets and all liabilities are reflected. So those capital assets and your long-term debt sit on that statement of net position. And you folks had about $78 million of additions to CIP, and that's an asset, so that's driving up that net position for your fiscal year 2021. Moving on to page 12 and 14 will be your governmental fund financial statements, with page 13 and 15 walking you through the details of the reconciliation between the fund and the government-wide. So again, as I had stated, the government-wide is full accrual, all long-term assets and long-term liabilities, whereas on page 12 and 14, these are your fund financial statements, and those are recorded on the modified accrual basis. So meaning any long-term assets and long-term liabilities are not reflected, but rather recorded as revenues and expenses or other financing sources and uses. So you had a decrease in fund balance of about $80 million on the fund level financial statements, again, which is much driven by those capital asset additions that you had. But again, because these are on the modified accrual basis, those are recorded as capital outlays, and it's recorded as an expense. This is all based on your budgetary basis and almost as if it was cash basis. So those capital asset additions are reflected as an expense, which would drive down that current year fund balance. Overall, to speak to what has happened in capital assets, you had a net increase of about $74 million, again with that addition to CIP of about $78 million, offset with $4 million of depreciation. Your net capital assets currently sit at $375 million. Your long-term debt reduced by about $19 million. You had principal payments just over $16 million and had your debt refunded in the amount of about $29 million for that 2010 and 2011 A serial bond, and you issued $26.4 million to refund those 2 bonds. On page 23, you will find a nice schedule that'll provide you an amortization of the serial bond principal and interest payments due over the next series of years. And then following that schedule, we'll actually explain that bond refunding that took place this year and quantify that savings that JSCB is going to experience over the life of that debt, with a savings of over $3 million by participating in that refunding. Your footnotes run page 16 to 23. They outline all of your accounting policies, your capital asset schedule, your long-term debt schedule. The one thing that is currently not in the footnote is a subsequent event footnote to reflect the governor signing into law and approving that phase 3. By the time that we had put together drafts in anticipation for this meeting, word came through, so we will get that reflected in the final copy that will be issued later today. So you'll see that subsequent event. Page 24 and 25 is what we consider to be other information that outlines the activity for JSCB this year, looking at it from strictly a debt perspective versus a capital asset perspective. And then page 26 and 27 is our report on our audit performed in accordance with government auditing standards. In this report, we outline and define what significant deficiencies and material weaknesses are, and we are happy to report that there were no issues as a result of our audit for fiscal year 2021. Any questions on the financial statement before we touch on the required communication? Okay, and then just a quick look at the required communication, which is that stapled 2-page document. So audit standards dictate that we communicate with you at the conclusion of the audit and recap any changes in accounting practices or significant accounting policies, mention any significant estimates, of which include the estimated net book value of your capital assets. And then this is where we would communicate any corrected or uncorrected misstatements, of which there are none. We did not have any disagreements with management. We are not aware of management consulting with any other independent accountants. And there were no other matters that we felt needed to be brought to your attention. So in closing, again, a huge thank you to the folks at SCSD, Suzanne Slack's team, always willing to work with us, help us, provide us with what we need, and another successful audit. So thank you. Any questions? Great. Happy holidays.
Keely and Suzanne, Donna, the rest of the team, nice job as usual. Okay. You too, Suzanne. Let's move on to, we're going to do our financial statement, Donna?
Good morning.
Morning.
What Keely just obviously presented to you was our audited financials at the end of June 30. And what I'm presenting to you now is our financials for September 2021. As you know, I usually do the financial summaries, but we're at the quarter end, so that's why I did the full statement at this point. Right, so I'm going to start down on page 5 of the monthly financials for September 30, if you have that in front of you. So down on page 5, we're looking at the end of September. The total JSCB fund had a total of $41.2 million of phase 1 and phase 2 cash. And included in that cash is $7 million, and that's to be used for debt service. You can see that in the middle column. Also, I'd like to bring up the capital asset net of accumulated depreciation. That's up to $375 million. And I know that Keely just addressed that, but a little bit further explanation on that is capital assets net of accumulated depreciation is our closed phase 1 projects, closed phase 2 projects, and any construction in progress, okay, minus our accumulated depreciation. So we've depreciated our phase 1 project, all our closed projects are currently depreciating. So that's what that comprises, that figure, okay? So that brings our total assets to $416.4 million. So compared to August, the August statement, our cash decreased by $7.9 million, and that was due to vendor payments. of $7.9 million, and we had $374 of investment income. So included in the assets, as I said, was the $375 million. That gives us $479. Now, the total breakdown I gave you, the total liabilities at the close of September is $347.2 million, and that is for both Phase 1 and Phase 2 bonds payable. So that gives us a total, a net position of $69.1 million at the end of September. So now I'm going to move on to page 6. And page 6 gives us our statement of sources and expenditures. There's not a lot of activity here, except for the fact that we did have an earnings investment of totally from 7/1 to 9/30. We have $26 of earnings investments in Phase 1 and a total of $2,381 in Phase 2. And our capital outlay to date is $19.4 million for Phase 2 projects. And then on the next page, our page 7, that's our cash flow statement. And the cash flow statement is pretty clear. It shows what I just talked about with regards to capital outlay. And it does represent everything that's been spent from July 1 to September 30. And the statement does project that we will have $12.6 million at the end of the fiscal year. And then we're going to move on to the last page. It's page 8. And that is our revenue and expense inception to date report. And that shows that our Phase 1 total sources is $141.6 million. Our total expenses is $141.6. And for Phase 2, our total sources is $292.2, and our total expenses is $258 million. So we're getting close to the end, which is a great thing. And I did include on the last page the financial summary, which is what I've been reporting every month. So does anybody have questions?
I just have a comment. Can we get a little bigger print? I have our readers that can see it.
I know that cash flow statement is it's a little tiny. I know. That's why I have these. Okay, thank you.
Thanks, Don. Okay. Looks like we just have resolutions left, so I'm going to turn it back over to Joe.
Yes, we have several resolutions this morning, beginning with resolution number 35, which would approve the just presented audit.
Second. Any further discussion? All in favor? Aye. Opposed? Carried.
Then we have resolution number 36, which would authorize our monthly contractor payments.
So moved.
Second.
Any further discussion? All in favor? Aye. Opposed? Carried.
Followed by resolution number 37, which would authorize our annual directors and officers board liability insurance for this coming year in the amount of $13,108.
Any further discussion? All in favor? Aye. Opposed? Carried.
And finally, resolution number 38, which would authorize an amendment to the Hvac and Associates contract for Corcoran High School to increase their total contingency budget by $125,000.
So moved.
Any further discussion? All in favor? Aye. Opposed? Carried.
That completes our resolutions for this morning.
Great. Thanks, Joe.
You're welcome.
Any additional business to come before the board? Motion to adjourn?
So moved.
Second. All in favor? Aye. Opposed? Meeting is adjourned.